Welcome back to another episode of the Anatomy of the Trade series. Happy holiday season, and as we've mentioned in the previous week, we are going through the Q&A session. If you guys would like to leave us some of your questions, please do so under the videos. We'll collect those or post them on Twitter. Send them to our wyckofassociates@gmail.com email. We will do this periodically, probably once a quarter or during some kind of holiday seasons breaks. And those are great sessions, to ask questions, to receive answers, because usually we discuss the trades and so on and so forth. So with that, let's go to the questions for this session. And the first question is, what is the win rate for Wyckoff-based trades? So it's really hard to say because of a couple of things. This is not the methodology that has a very kind of like determined, strict rules that you have to follow. There are so many variations, and you always have to judge the market by its own action, rather than have, let's say, a moving average and with the crossover of price by certain percentage on the certain close, then that's your signal. You just have a lot of variations, and what I tell students is that even though it feels like it's a discretionary method, it actually is not. And I've been personally trying to systematize so much of this knowledge and put it into kind of like a very algorithmic way of how we analyze the chart and how we deduce what kind of, let's say, bias time and character we will have in the next move. Having said this, I would also say that it depends on the proficiency of the user of the method. So for those who are more advanced traders, they're going to have a much better win rate. And then for those that are beginners, obviously that win rate is going to be less because the level of recognition of specific patterns is going to be, at the beginning of the road for them. I do not necessarily have the stats, let's say for this year, what's my win rate. I usually orient myself around just the P&L. Am I profitable? How much am I profitable? How much am I profitable relative to the profitability of the previous year? And then I would go into the analysis of like specific trades or specific time frames, specific instruments that I trade. How am I profitable with my swing trading? How am I profitable with my intraday trading? How am I profitable with my campaign trading? So those different accounts, you could collect the stats and just look at that. Franz, in your experience and in your opinion, how would you discuss this, win rate, which is based on the Wyckoff method?
Sure, Roman. Well, for me as a student and starting kind of from ground zero several years ago, there are a couple things that I would say to help answer this question from my point of view. The first is that the idea of putting a kind of a trading plan together and understanding what it is that you're trying to accomplish is absolutely vital, because you might have one person who's got a long-term time horizon, another who's a swing trader, another is an intraday trader. Each of those are going to have a different approach to their trading. So the first thing that you need to determine is what's your time frame and put a trading plan together. And then once you've got that, it's not enough just to have the trading plan. You have to get these numbers for yourself, and the way to do that is to back test. And it's work, but this is a serious question, and that's the serious answer. You go back and you find historical setups that are that are congruent with your trading plan, and then you trade them based on what happened historically. And after you've got a population of those trades, you're going to know how your trading plan behaves. And that's what you need, because at that point you can answer the second question, which is the risk reward. You know, you want to know how much you want to take in risk each time you engage with the market. So your downside is determined in advance, and the only way to really figure that out is to do back testing and to see what the, you know, what your expectancy, what your, you know, your R, all of these numbers that you derive from back testing before you actually engage with the market. And then once you've got that, start small. That would be my advice. You know,
Mm-hmm. All
when you
right.
start going into the real market, you know, don't put it all out there at first, and make sure that you can engage in real time the same way that you're engaging, you know, with just paper historical trades.
All right. Well, let's talk a little bit more about the risk reward. So usually this is the ratio, and we usually would say reward to risk, right? So we want to identify how many units of reward we could potentially have relative to the units of risk. And that would define for us, you know, the acceptance of the trade. Would we accept this trade? Would we go into this trade or not? It's very easy to calculate. Reward could be based in the Wyckoff world on the P&F counts. So you could extract the targets like this, and you could calculate what's going to be the profitability if the price goes to that particular target zone. And then the risk, this is just the difference between your point of entry and your stop loss.
Mm-hmm.
So then we want, and Wyckoff said that at minimum we want 3 to 1. So we want 3 units of reward at the minimum to the 1 unit of risk. Now, this is not necessarily should be true for all of the traders. First of all, if you're a long-term campaign trader, this type of risk reward 3 to 1 is not that acceptable. I mean, I would say I would be thinking more about maybe like 5 to 1, or you know, up to like 10 to 1, something like this, where you have a substantial potential for the reward relative to the risk that you are taking because you're holding on position for a long time. For a
Mm-hmm.
swing trader, this is where 3 to 1 is going to work the best. So it's more for the short-term trades where you want to take the whole swing, and usually that's going to have a built-in 3 to 1 reward to risk ratio. And then for the intraday traders, that's a very tricky one because you can create some of the strategies where your risk is so minimal on a lower time frame, and then go on a slightly higher time frame and look for the targets that are going to have that 3 to 1 relationship. But predominantly, what I see is maybe like 1.5 to 1 to 3 to 1. So it's in the range. And it just depends on the strategy, it depends on the trader, depends on, you know, how you, you know, put your, where you put your risk and so on and so forth. So a very interesting question, but requires a little bit more thought here. This is just kind of like initial basics that you could use in understanding of this question. All right, let's go
Mm-hmm.
to this second question. Uh, how are you sure on the chart that you correctly identified all parts of the Wyckoff structure? I think this is an easy question because, as always, and in technical analysis as well, you always look for a confirmation. So, for instance, if we are in the downtrend and we're seeing increased volume signature and we're seeing increased downward spread, we know that we are probably in the climactic final run to the downside. That will be met with the stopping action at the sell-in climax. So how do we know that the sell-in climax has happened? We need some kind of confirmation. what would be acting as a confirmation of the selling climax? Well, probably the rally as an opposing force that comes that has some kind of change of behavior, where we might be seeing that, the demand signature is actually increasing and that the price has the characteristics of the bullish behavior. And then we're going to stop at the automatic rally high after the change of behavior. So how would we confirm that the automatic rally is done? Well, if we have some kind of reversal bar for the swing, this would act as a confirmation that the automatic rally is done. Then we go to a secondary test. If we stop, let's say, as a high low, lower low in the vicinity of the selling climax, and then we reverse again, that's another confirmation and another reversal that not only the secondary test swing is done, but that this test was successful relative to the climactic action, and then also that we are concluding phase A. So there is a sequential logic in the way how Wyckoff events unfold in the trading range or in the any type of trend, and you always seek a confirmation. You always go from action to test to confirmation, and that's kind of like the sequence of how we operate. Franz, what are your thoughts on this?
Well, my thoughts are that once you have this concept, you have to cement it into your very being, and the way you do that is by practice. And one of the great practice tools that Wyckoff Analytics provides is the bias game. Every week, you get to look at a new chart, a setup, and at the end of the chart, price is going to move in one direction or the other. So you go through and you do your analysis and you figure out, the bias, and it's just practice, and it's a great way to kind of cement all of what this question's all about.
All right. Okay, next question, and we have three more, so we're going to go a little bit faster. How do you know you're not mislabeling the chart? Well, you could definitely, and the way how we teach students is that you, in some instances, you are going to mislabel it, and this is okay as long as you understand that this is what happened and this is what you did. So for instance, here is an example where mislabeling could happen. We might be thinking that this is an accumulation as the price comes into the trading range formation. And we are labeling phase A, so our selling climax, automatic rally, secondary test. And then we see the low that undercuts the support, and it acts as a spring. So we're thinking here that we are in the potential phase C. We could even enter a position here in anticipation that a sign of strength rally is going to develop. So, and let's just assume that during this sign of strength rally, there are two things where you could see the mistake. During the sign of strength rally, the characteristics of how the price moves and the volume characteristics are less bullish for the definition of the sign of strength rally. So therefore, this rally becomes a suspect for us. But did we identify a spring type of action correctly? Yes. So for now, this is going to stand until this pattern fails. And it's going to fail somewhere here around this area where the price starts to, the price upthrusted, then tested that upthrust high, and then it failed. And with that failure, we know that we were wrong in our analysis, and therefore we mislabeled the chart. Our trade will be closed at this point, and we will have either a small win, a break-even trade, or a small loss. And to me, this is a highly acceptable trade. We are just taking an opportunity in what we thought was a potential phase C, and we're just saying, we're going to go with this, and if it's going to work out, great. If it doesn't, we know how to manage this position and how not to allow this position, to create a big loss for us. And with that failure, we're also saying that this was a sprint type action and not an actual sprint, and we would relabel it. We would say that this is a secondary test in phase B as a minus sign of weakness, suggesting that we're going to have some kind of retest into phase C, and then this is not a phase C. Then as the price goes into the actual phase C and we see, the attributes of the recovery, then we're going through the same process, phase C, sprint, and now we're in the position, and as the price advances, we are looking at the same two characteristics. Is the character of the move, shows a sign of strength type of characteristics? That's number one. And secondly, do we have any type of failure here around the backing up action? And as we don't, then we already know that this was a true phase C and our labeling was correct. Franz, your quick thoughts on this?
My quick thoughts, my WTC2 fellow students understand the flashcard concept that we use, and practice, practice, practice.
All right. Okay, so we have, I believe, 2 more questions, so we'll go through them really quickly. What time frame does Wyckoff methodology work in? Does it work on the intraday? So this is a very common question also. What kind of instruments does Wyckoff method work in or uses? The answer to those 2 questions is very simple. It works in all time frames and it works with all instruments. And all you have to have is the price, volume, time, and then you could even not have the volume, because I know that some of our Forex traders that come to us, their question is, well, could I use this in Forex because we don't have that volume signature? Yes, you definitely could extract the volume information from the price action itself, and we teach how to do that. So, any time frame, whether this is a campaign, whether this is a swing, whether this is an intraday, and here is this example of the intraday. This is a 1-minute chart. So this was an actual trade on this day that I've conducted, just recognizing that there is a range-bound conditions. Phase C could be extended a little bit more, and we are in some kind of sprint and test situation, and off we go. Momentum is deteriorating, so this was the exit just based on the condition that was created by the momentum, and that was an intraday trade. And in terms of the instruments, and we discuss a lot stocks, but we also discuss a lot futures and cryptos. So all of them you could use, and other instruments as well. So there is no limitation as to the time frame or to the instrument. All right, last question. Ooh, this is a big one. So Franz, you will have to help me out here. What is your decision tree for choosing a trade? What is the trading plan? Well, I'm going to talk about the process, not necessarily a trading plan. Trading plan, is something completely different. So for that, you will have to come to the classes and we could discuss it. So there is a sequence of steps that we do in order for us to go through the selection algorithm and then to go through the analysis and create some kind of executable watch list. So we want to look at the market environment first, and just to determine what's the long-term and short-term trends, whether the market is in the trending environment, in consolidation, and on different time frames. Then we want to use the top-down approach, where after the market, we'll look at the sectors. And there we're looking at 2 things, current leadership and current rotation. We do the same with the groups, current leadership and current rotation. So we define which of the groups are of most interest to us because the money is going into those groups, and there is an emergence of the leadership characteristics. And then in those groups, we want to look at the stocks with the same characteristics of leadership and the rotation. That will create our broad watch list and broad universal stocks that we would look at. And this is where we will start going into our Wyckoff analysis. And Wyckoff analysis will start with, and we will have the trading plan. We do have that. We do have the trading plan on that. Again, if you're interested, just sign up for our classes and we'll discuss that. We're going to look at the price structure. We're going to look at the Wyckoff phases and events during the trading range. We're going to look in the trading range at the volume and price characteristics to determine the bias, the timing, and the character. And then we'll discuss tactical decisions where the price would confirm its bias and where the price would disconfirm the price action and the bias itself. And then we'll start thinking about how do we execute this trade? What are going to be our points of entry, stop losses, and how would we move the stop loss to the point of exit? And then all of this information will go on our watch list, which we will use for the next week as we go through the week and on the daily basis. These are the stocks that are going to end up on that watch list that we're going to check on the periodic basis, maybe at the open, at the close. And if they satisfy our criteria for tactical points of entry, we're entering with the predetermined stop losses. We know the targets. We know, how the price could fail or how the price could confirm the movement in the trend, and then we just execute. Franz, do you use this type of sequential step-by-step approach, or is it somewhat close to that?
I most certainly use this type of approach. Yes, absolutely. It's essential because on the left you've got, it looks like a funnel, and that's how you focus your attention and your efforts and your success. So yeah, absolutely.
All right.
Trust the process.
Trust the process, exactly. All right, guys. Well, a very interesting episode with quite a lot of questions. Hopefully, that was insightful for you. Again, if you have any other questions, leave those questions under the videos. We will collect those, and once a quarter, we'll go through those. You could also send your questions to wyckoff@gmail.com. With that, thank you so much. Happy holidays. Enjoy your holidays breaks, and we will see you in a week. Thank you all, and thank you, Franz.
Thank you, Ramon. Happy holidays and Happy New Year. Talk to you next year.
Bye-bye.